12 years ago, we faced another situation which brought the world down to its knees. Today, we're facing a pandemic which is obviously medical in nature. 12 years ago, we faced another crisis which was financial in nature. And just to understand the magnitude of damage it did, ask your parents what happened, how did their lives get affected 12 years ago in 2008. Maybe their job, maybe their business, maybe their bank account. Ask them, right? Most of us were really young. Maybe some of you guys were not even 10 when this happened, so there's no way you all might be aware about it. But ask. Now, we've been asked this question by literally all of the people who are interested in learning about case studies. All of our ACCA, CFA students, all of them want to know. And obviously the movie Big Short really did a good job in explaining this, but still everyone didn't understand. So what we've tried to do today is we've tried to narrow it down to even more a simpler, very simple way of explaining the whole deal. And hopefully without using too much of jargon. So I'm going to try and explain this and I'm going to use Indian context. So for the banks, I'm going to use banks which all of us understand. So let's try it. Okay, so now let's say in Bombay, I'm staying, for example, I'm 28 and I want to, I'm doing a job in a decent company and up till now I've been living on rent, okay. Let's say I've come from somewhere from Gujarat, okay. So my parents are there, I'm trying to make my own living here. Obviously in India, one of the most important milestones besides, do your education, get a job, get married and is get a house. So I, after a few years of struggling in Bombay, I want a house. So I find a broker who shows me one apartment, one flat in, let's say there's a Lodha building. Let's say the Lodha building has 30 floors, 3 flats each floor, that's 90 flats. And for example purposes, each flat is worth 1 crore. So he shows me one flat over there and I really like it. Now I want to buy it, obviously there's no way I have 1 crore on me, right? I must be making 35, 40 grand per month in my salary. I don't have 1 crore. So what I do is, like everybody, I go and get a loan. A home loan or a mortgage. Okay, now before I go ahead guys, very important, if you have a house, awesome. If you don't, please listen to me. I have personally seen people break mentally because they have a home loan, and it's a huge trap if you do not know what you're doing, if you have not financially planned it well. A home loan taken, because home loans go up to 20-30 years. If you take one today because your life is going well, you just maybe got married, maybe it's part of the culture you're brought up in, please go ahead, but be sure, because I have seen people who do not calculate and they get screwed. Imagine you're working in a company today which is going great, things are going fine, you buy a house. Your home loan is, let's say, 30 grand per month, and you know that, okay, as I grow, I'm going to make more and more money. But you start disliking the job for various reasons, right? It could be the actual work, could be the hierarchy, God knows what. You want to switch. You're worried about switching because if you don't get a job which pays you as much, you've got to stay because you are trapped with the home loan. You switch, you dislike that job, you can't quit again because you're again worried about the next job. You want to start a business. You don't have the risk appetite because what happens if the business fails and you can't pay the home loan for the next 20 years? You'll be out of a house. You have a passion which you want to follow. For that, it requires a low income job which you personally are okay with, but you cannot because you have a home loan to pay. So as long as please do it, right, if you need to, but please be sure, a little more calculative. Remember that it's not as simple as it looks today, because what changes in 3, 5, 10 years is, think about your own life, right? Things change dramatically. Imagine a 20-30 year loan which you've got to keep paying. So please plan for this. But there's a way to do it. It's a whole subject of financial planning, for which by a lot of people again ask, which we can make another video on. But putting all that aside, coming back to the example. So I say, okay, fine. You know what? I like this house. One house in the Lodha, in the Lodha building. I want to buy it. So I go to HDFC Bank. Now the HDFC Bank people say, yes, we give mortgages, we give home loans. It's a 1 crore house. You want a loan for, let's say, 30 years. Great. The interest is going to be this much. They'll calculate the interest based on my background. So they'll ask for my education, my current job, my pay, things which they can predict whether I would be in a position to continue paying them for the next 30 years. They calculate interest and tell me, okay, fine, based on this, you need to pay per month for the next 30 years this amount. In my mind, I'm like, okay, fine, let's hypothetically assume it's 30 grand. No, let's say it's 25,000. I tell myself, okay, 25 grand over the next 30 years, fine, I'll pay. By the way, I'm not talking about a lot of things, adjustable loans and all of that. I'm not, okay, simple, I'm keeping it. I have to pay 25 grand for the next 30 years. Got it. I know I'm making 35, 40 right now. I'll be increasing my income, no problem. Bank is happy with me. Bank also knows that in case I land up defaulting, means I don't land up paying, they've said that we will take your house away. I said, okay, fine. Right? I'm happy, I work hard, I continue paying the bank for 30 years, eventually it is fine. So bank makes its money with interest, I have my house, everyone's happy. This is ideal. Now, what started happening is, HDFC, in our example, let's say in the whole Lodha building, 90 flats, hypothetically each person 1 crore ka flat, they took a home loan for. So HDFC, so 30 floors, 3 flats, that's 90 flats. Each flat is 1 CR, that's 90 CR. Let's assume that the bank, the HDFC, gives different people 90 crores worth of loan for the next 30 years. HDFC has the capability, it borrowed a little from RBI and it did this because it's done its calculation that these guys should be able to pay, and if they can't, we'll take over their apartment, sell it and make our money back. All good. Now, in this comes Goldman Sachs. It's an investment bank. Goldman Sachs looks at this Lodha building and says, I can make more money with this. So it goes to HDFC and says, listen, this is 90 CR worth of loans you've given. I'll pay you 100 crores, for example. Make your 10 crore profit today only. Don't wait for 30 years. And this whole building, where people are supposed to pay you EMI, let them now pay me EMI. Goldman Sachs says. HDFC says, fine, take it. Goldman Sachs says, okay, fine. I have to pay HDFC 100 crores. Let me borrow from somewhere. So it borrows from institutions, from countries, other countries. Investment banks have a lot of money. They borrow 100 crores, give it to HDFC, get this whole a building with all its EMIs coming to Goldman Sachs. Now, what does Goldman Sachs do? Goldman Sachs will understand, okay, fine, half of these people are really doing well, the other half are not doing so well. So, the top half, which are doing really well, are very safe, they're definitely going to pay the mortgage. The other half is probably, we can consider a little risky. Now, what it does is, it takes because obviously by default, the ones who are safe will pay a lower interest, the ones who are risky will pay higher interest. So what Goldman Sachs does is, it takes the half which is safe and gives it to, for example, an insurance company. Why? Because an insurance company wants safe investments over the next 30 years where EMIs will keep coming and they will keep making insurance annuities and all of that as per their business model. So Goldman Sachs knows this. So it says, it goes to the insurance company and says, here, take this. Take this, half of these people. So hypothetically, if it bought for 100 crores, 50 crores, it says, here, take it, give me 60 crores. The insurance company calculates, okay, 60 crores, if I pay Goldman, I will get so much of money over the next 30 years. It does its math, it's great, done. Goldman Sachs takes another 10 crore. The other half, which is risky, it gives, let's say, to a hedge fund. Why a hedge fund? A hedge fund is like a mutual fund on steroids. They don't have too many rules. And hedge funds are known to take risky investments because they want higher returns. Remember, high risk, high return? So, hedge fund calculates, okay, these are a little risky, but they're paying a higher interest rate. So, over the next 30 years, I think I'll make enough money. And they say, okay. Again, Goldman says, fine, 50 crores worth of this thing, give me 60. It gives it. Goldman Sachs has now made 20 crores based on the entire transaction. From the 20 crores, it pays back the interest from the people it borrowed. The insurance company and the hedge fund for the next 30 years keep getting EMIs from these people in this Lodha building. Everyone's happy. Everyone's happy. And everyone's super happy, because HDFC made 10 crores like that, Goldman Sachs made 20 CR minus the interest, and insurance company and hedge funds are getting money. And why is everyone so sure? Because who doesn't pay money for their house? Which of these guys in this apartment, in this building, are going to say, you know what? I don't have money, I'm not going to pay. How many of them will do that, right? Especially if this is their only house. Also, if they do that, the insurance company, the hedge fund gets their apartment, they can sell it. And why is that good? Because real estate or property prices are always on the rise. So, in the insurance company, you either get the EMI for the next 30 years or you'll get the entire asset and it will rise in price and will sell. So, there is no downside for anybody in this entire chain. But that's what everybody thought. What started happening is, well, in hindsight, they say it's greed. Greedy people, right? So, insurance companies and hedge funds are making a lot of money. So, they told Goldman Sachs that, listen, like this building, find more buildings like this. Give us more buildings where we'll get EMIs for the next 30 years on mortgages, because people will pay mortgages. Insurance company says that, hedge fund says that. Goldman Sachs says another way, like, great, if one building can make you 20 crores, imagine what 1,000 buildings can make me. So it went to HDFC. It told HDFC, listen, this one Lodha building, get me another 1,000. I'll pay you 10 crores into 1,000. HDFC went and found brokers across and said, guys, get me people. Get me people who will take loans. Brokers always getting commissions. They said, sure. They went and started finding people saying, get a house, get a house, get a house. And they just all started making money. But remember, the main thing in this is HDFC kept on saying that we will only give a loan to people whose background shows that they will end up paying. When greed reached its peak, what happened is everybody who could afford a house based on the background was sold the house. Mortgage. Now, even if it was a big number, there were no more people who were qualified who could buy the house, who could take the mortgage. So, now what happened? Everybody out of greed said, you know what? Let's stop being so strict about people who are qualified. Okay, you don't have a good education background, okay, you don't have a good job, okay. Home loan, who will not pay, right? Take a house. It started then giving people who are not qualified enough to pay, because they said, of course this person will find a way to pay the EMI, and if not, we'll take his house. Logically, right? And it started happening. That means the guy who's working at McDonald's, who's barely making anything, may not make enough to eventually buy a 1 crore house and pay interest, was still given 1 crore as a loan, as a mortgage, told buy it, take it. And that kid, 24 years old, working at McDonald's with the burgers and hating his life, says, I got a house. I'll pay the EMI, I'll figure it out. I got a house. To give him the 1 crore, HDFC had to borrow from RBI to buy, and he borrowed enough to get 1 more building, 2 more buildings, 5 more buildings. So he kept on borrowing from RBI. Goldman Sachs kept on borrowing from different places and kept paying HDFC and started buying all of these. Started giving these to insurance companies, started giving these to hedge fund companies. Now, what happened over here? The McDonald's kind of people who were living in these buildings, obviously after a couple of years, could not pay. So what happened? They said, fine, get out of the house. The insurance company or the hedge fund got the house. And remember, property prices are always rising. But there was one flaw in the plan. Property prices only rise because there is demand, because land is a limited supply as a commodity, and demand is always there. So when demand is growing but the supply is limited, prices rise. That's why property prices always go up. But they reached a position when everybody who could buy a house had already bought. There was no more demand for the house, which the McDonald's guy is now out of, because he can't buy it. But everybody who could buy it is not requiring, they already have a house. So what happened? The price of this apartment started falling. And suddenly, like the McDonald's kid, multiplied by 1,000 and then 10,000 and then 1 lakh and then 10 lakhs, so many people who were given this loan without being given the qualified credit score, they started moving out. The house went into the market, but nobody was buying it, and the prices started going down. The first time property prices started going down because there was nobody to buy it. Everyone who could buy it already had a loan, already had a house. Now imagine this property went down. The people in the building who were paying EMI on that 1 crore realized that that same apartment, which was when I took this loan for 1 crore, that was also for 1 crore, but now that price is 75 lakhs. Why should I continue paying interest on a 1 crore house, 1 crore principal, when I can instead buy it at 75 lakhs and get the same house? Do you understand? So the people who were able to pay also stopped paying, thinking that I would rather get a house which is cheaper, even though everything is the same. So they said, I'm not going to pay. Can you imagine the people who couldn't pay anyways were not going to pay? The people who could pay said, why should I continue paying at 1 crore when I can get the same house at 75 lakhs? Pay lesser principal, lesser interest. And what started happening? The ones who could pay also stopped paying. The ones who could anyways not pay didn't pay. Now the insurance company, the hedge funds started getting into trouble because they were expecting more EMIs to come. Now they are not getting EMI, so they told Goldman, listen, stop selling me any building, I'm not going to buy. But Goldman had borrowed so much money to buy so many buildings from HDFC. So now Goldman is stuck. It has taken on so much debt. It has bought so many flats, but suddenly there is nobody who is buying. And they stopped making not only profit but overall revenue. Now they could not buy. In the meantime, HDFC had borrowed more from RBI to get more and more buildings. It was a cycle. But Goldman Sachs, wait, hold, their insurance company and hedge funds are not buying. How the hell will I buy from HDFC? HDFC is now stuck. HDFC is stuck. The brokers are saying, listen, we got more people, but these guys are not qualified. So HDFC says, then we are not giving them anymore. So the brokers started losing money because now they don't have anything else to do. Can you imagine? Because the insurance company and the hedge fund company said no. Goldman Sachs had so much of debt and nobody to sell it to. So many buildings nobody sell it to. Same thing at HDFC, who was expecting Goldman to buy. And this way the entire channel basically started freezing. The amount of money that these guys had borrowed was not sustainable if they could not sell it. And they couldn't sell it because in the first place, they were selling these apartments to people who could not afford them. And once this started happening, these companies started going bankrupt. So in the real world, actually, instead of Goldman Sachs, it was some investment bank called Lehman Brothers and Best. They had borrowed so much, they could not pay. They can't pay HDFC. HDFC had borrowed so much money, not only from RBI, by the way, from customers like you and me, like the people living in that house who would earn a little bit would put money in HDFC. Now HDFC had so much money to owe people that it could not pay these guys. Simple, it is their money which they had deposited. Now HDFC had to use to pay off debt. These guys who bought the loan, the mortgage, started losing their money from this bank. There were lines outside the banks in 2008. People said, give me my money if I want. And banks said, I don't have any money. All your money is gone off into paying people because we kept on buying these apartments thinking that Goldman Sachs will buy, Lehman Brothers will buy. Lehman Brothers like, listen, the insurance company is not like insurance company said, it's my choice. I don't want to take risky investments. And the entire cycle basically just collapsed. This is the simpler way. Of course, I've left out a lot of things from credit rating agencies. I've not explained mortgage-backed securities, subprime mortgages. I'm not explaining credit swaps, which is of course. But the concept of the cycle is what I wanted you guys to understand. I'm going to make one more video where I'm going to talk about what happened post 2008 till now. Okay, what are the things that have changed to prevent some of this? Please watch this video as well.